Good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today. So today we are joined by 6 companies: Aldoro Resources, Elevate Uranium, Argenica Therapeutics, Black Earth Minerals, Noxopharm and Sovereign Metals. Up first, we have a presentation from Aldoro Resources. And to tell us more about their WA nickel projects, today we are joined by Non-Executive Chairman Joshua Letcher. Good morning.
How are you doing?
Josh, I'll just bring up your presentation.
Thank you very much. It's a pleasure to present a short overview and update on Aldoro flagship projects at Anandi, along with the other opportunities that are here today. Next. Our major shareholders have indicated their ongoing support, with the bulk being on the register since the IPO. Our shareholders have been early and significant backers of Vulcan Lithium, Rumble Resources and Los Charros, to name a few, which all have been multi-baggers for those who have been patient. We are pleased that the Nandi asset vendors remain meaningful shareholders on their register, as opposed to being sellers once they've received their vendor shares. The top 20 shareholders hold circa 50% of the register, even after being listed for 3 years, which is not the norm. Next, thanks. We're comfortably funded to complete our proposed drilling program, as well as being funded should we upsize and extend the initial drill program on success. The Nandi complex is the largest layered mafic ultramafic complex in Australia to date, of which Aldoro owns 100%. The time for nickel and copper, as well as PGEs, is now, with the boom in the battery market and electrification of everything. Next. We have been very deliberate in our systematic approach to taking much execution risk out of the forthcoming drilling program. We've surrounded ourselves with the best possible technical resources available who are proven nickel mine and resource discoverers. Those technical resources are sufficiently comfortable with the project and approach that they have all acquired stock, not by free options and shares, but by real dollars on the market. Shareholders should be encouraged that this demonstrates commitment. This year, we have completed fixed loop and moving loop surveys, along with field site visit to confirm historical workings and drill planning of the drill-ready targets identified. Ongoing, we are conducting 2-dip and gradient array IP over all targets to increase our confidence before drilling. First holes at BC1 and BC11 are expected this month, and we are positioned on site to extend the drill program on the spot upon positive intersections. All drill holes will also receive downhole EM, so we can update the geophysics and geology on the fly. Next. For those not aware, we have identified over 16 targets of interest at the Nandi complex, which is the largest layered mafic ultramafic complex in Australia. Historical grades from previous drilling have hit up to 10 meters at 1.5% nickel and consistent grades over 0.5% nickel with copper and PGEs over at least 5 kilometers squared. Next. Whilst the complex has historically been peppered with drill holes, none of these holes have intersected the targets that the latest geophysical tools have suggested we drill. One previously came within 40 meters and intersected attractive grades. However, fortunately for our shareholders, missed the nickel conductor target we have refined. Some naysayers may say it has been drilled before, however, never in the right places. This is why we are taking such a de-risking approach, which is proving to be very effective at finding new untouched targets surrounded by good grades. Next. Our recent field visit was exciting to see the historical workings and good grade gossans at surface. We have also completed the drill pad clearing for the current programs at BC1 and BC11, which we have a high level of confidence on, given they've never been drilled and stood out significantly on all 3 geophysical surveys. Next. Some additional thoughts I would like to leave you with, other than the ones recapping on the screen. Our forthcoming gold spin-off named Aurum Resources will see our portfolio of gold assets offered first to our shareholders. Aurum will hold an enviable portfolio of WA assets at a listing EV of circa 1.3 million, which we feel offers unparalleled upside for those shareholders taking up the offer. By spinning off the assets, ARN has achieved a number of things, being a see-through valuation for the assets for ARN based on the Aurum trading price, a sharpened battery metal focus with the remainder of the ARN portfolio, a sharpened management focus on the core assets being Nandi, Nickel PGE, and other lithium projects, which you will see in our announcement that went out this morning. An attractive gold play open only to those that hold ARN shares, where we feel material upside exists. A removal of ongoing expenditure commitments for ARN to keep gold assets in good standing. Also, a more refined asset structure for ARN should the Nandi deliver a nickel discovery, which would make us more corporately appealing from an M&A target point, given the appealing nickel price thematic at the moment. Next. And one to keep you thinking, we have been very busy in the background working on our WA lithium project at Windamarra, which is just near the Nandi project. Not as a fallback to Nandi, but because we think we have a world-class lithium and tantalum asset where the underlying lithium battery thematic is conductive to seeing a sharp re-evaluation in our market cap as we prove our lithium project bona fides to the market. Thank you for your time, and feel free to reach out at the email on the screen, and happy to answer any questions if there is any. Thanks.
Well, Josh, thanks for the presentation. You actually just answered one of the questions about Windamarra. So there's one actual one that's come through as well. So would lockdown interfere with the drill plan?
So the drilling rig that we're using is actually at UNME currently. So they're mobilising to site, which is a very short trip from the Nandi site. So we don't see any issues there. Yeah, and we're taking all precautions around COVID as well.
I think there's just another one that's just popped up. When will be the next big drilling plan after the July one?
So we'll take it as it comes. So the initial 2 targets, VC1 and VC11, will be putting roughly a few holes into each. And then based on the intersections we receive, those programs will be extended and expanded. With the other targets, we want to complete the 2-dip survey as well as the gradient array survey first before we put holes in there. So those 2 surveys are definitely needed for those targets, just to confirm before we go and spend the big dollars on drilling.
Brilliant. Well, thank you for joining us today, Josh. Look forward
Thank you very
to
much.
hearing more news.
Thank you. Bye.
So up next, we have a presentation from Elevate Uranium with the ticker code EL8, which recently changed its company name from Marinika Energy. To tell us more about Elevate's Namibian and Australian uranium projects, today we are joined by Managing Director Murray Hill.
Good morning, Jane. How are you?
Very well. Thanks for coming back.
I've just had
the prezzo.
a problem with my sharing screen for some reason.
Oh, hang on.
It disappeared. Can you bring it up? Is that all possible?
Sure, I can bring it up.
Sorry about that.
It's okay. I'll let you jump into it.
Thanks, Jane. That's what a fantastic time to be involved in the uranium industry. If you could just go to the next slide. The decarbonisation, electrification continue to be developed globally, and decarbonisation can only occur with a carbon-free energy source such as nuclear. And you don't want to charge your battery with high carbon energy sources. So we really need nuclear power in that respect. And we want the power to work. We want the power when we want it, not when it's available. So we need a reliable baseload power, and that's what nuclear provides. So the thing about the uranium supply demand at the moment is that demand continues to increase, but supply has diminished. And that's diminished because of low uranium prices over time, but also the COVID impact last year with the Kazakhstan mines reducing production by somewhere in the order of 20%, and the world's largest uranium mine in Canada closing down on going to care and maintenance. So we really don't have a sustainable industry, nuclear industry, if the uranium price stays where it is. So the only one way for the uranium price to go, and that's up. So next slide, please, Jane. And so what we've been doing, we realised that this was going to occur, that there was going to be a supply shortage. So we started working on a strategy about 3 years ago, a counter-cyclical strategy to acquire projects and tenements that meet a defined criteria, and also to explore on this large strategic tenement position we've developed. And what we were looking for, and that defined criteria, was that the application of our patented upgrade uranium beneficiation process could add value to these assets. So that's what the strategy was developed on. Now we've been delivering on that strategy. We've picked up 48.5 million pound of high-grade assets in Australia. We've got the largest land position for nuclear fuels in Namibia, a strategic tenement position, and we're successfully exploring on those. And we're demonstrating how upgrade can add value. So we're really delivering on that strategy as we plan to. So please, next slide. So in Namibia, it's a world-class uranium province, the 4th largest uranium province in the world. It's very supportive government. The nuclear industry has been there, or uranium industry has been there for a very long time. Rössing have been operating since 1976 on a continuous basis. So it's a very well-established uranium industry. We've got the 61 million pound Marinika resource up in the north of the Erongo region. What we've done with upgrade is we've increased the grade by over 50 times to 5,000 ppm. Prior to leaching, so that's a huge increase in grade. And our target mineralisation is what Marinika is. It's a Paleochannel channel style deposit. These are formed by leaching uranium in millions of years ago from the highlands out to the east and flowing towards the coast in old river systems or Paleochannels. So these are generally, the uranium precipitated in these generally about 20 metres deep at most. So they're nice and shallow, which makes for low cost mining and development. So we are, as I said before, we are the largest landholder for nuclear fuels. We've focused on 3 areas in the country. If you can go to the next slide, Jane. Due to the shortness of time today, that Jane's given me 10 minutes, what a great story to tell. I'd love to tell you it for 30 minutes, but we'll just talk about the Namibia at the moment. We've developed this, we've put together this contiguous land package, which we've been exploring on. We commenced our exploration efforts at Copies, a new discovery there, which is sitting ready for us to go and drill out for a resource. We've gone and discovered the Herobeb project. That's got a Paleochannel system longer than the width of the English Channel, so it's a huge system. And then we've just also discovered this Paleochannel system at Namib 4. So what we're currently doing is we're doing an airborne EM. We're eagerly awaiting the results of the airborne electromagnetics, EM means, and that'll identify where the Paleochannels are. So we're looking forward to that result somewhere in terms of this month. We can then plan drill programs around it. We've booked a driller for September for continuous drilling through the end of the year, hopefully, because drillers are a little bit in short supply at the moment. But we selected this province because it's a province that there's plus 230 million pound there. We've gone upstream of these known deposits because the uranium's had to flow through our tenements to get there. So it's quite exciting exploration, high blue sky potential for us. So it's a good position we're in. Next slide, please, Jane. And then the Australian project. So we picked these up for a song. We paid 4 cents per pound in the ground. And I want to take you back to when I was consulting to Extract Resources on the Husab project in Namibia in 2012. They sold that project for $4.50 per pound in the ground. Now, I'm not suggesting we're another Husab or have another Husab or another Extract, but I can tell you that 4 cents a pound is extremely cheap. So we've picked these up assets up off through a file sale that Paladin had, sold it to a private company. We picked it up off them. So there's a huge amount of blue sky potential in these assets, certainly from a pure price perspective in terms of uranium price movement, but also in what we can do in value add. So just go to the next slide, Jane. We'll talk about the upgrade process. It really is, and we've talked about Namibia, we talked about Australia. We've got some pretty good assets in both countries. We're geographically diverse, and the icing on the cake for us is the upgrade process. It's a process that rejects greater than 95% of the mass prior to leaching, We've demonstrated on the upgrade, upgrade on Maranika that we can increase the grade from around the 93 ppm to 5,000 ppm prior to leaching. We reject acid consumers, which thereby reduces the acid consumption. And an example of what we've done in Australia, the Angela deposit, the impediment to that being developed years ago by previous owners was a high acid consumption, somewhere in the order of 100 to 120 kilos per tonne. Through our application of upgrade, we reduced that acid consumption to 24 kilos per tonne. That's an 80% reduction in acid consumption. So a huge cost reduction for the project, and just a demonstration of what we can do on assets. So, and it's a 100% owned process. So what it does, the benefits of upgrade is the reduction in capex and opex, and also it provides optionality for project development. So optionality, what I mean by we can either produce yellow cake on site through leaching and refining the upgrade concentrate, or we can truck the upgrade concentrate off site to a third party and they can leach and refine it. So we don't need to build the leach tailings dam refineries, hence our capex comes down even further, and it's a faster path to development. And we can develop projects at a smaller or lower grade than our peers. So it really adds significantly to us. And the other aspect of it is, because we remove the acid consumers, the calcite, prior to leaching, we can throw that calcite back into the leach tail, completely neutralise the acid in the tailings, and make it an inert product. So environmentally friendly outcome. So there's a lot of benefits of upgrade, cost-based, environmental. It's a fantastic process that we've got that nobody else has. So next slide, please. And then, so from a corporate snapshot point of view, we're a small, nimble board. We've got a small number of shares on issue. We've got cash in the bank. We've got no debt. Great position to be in. We've got enough cash to the end of next year for our exploration efforts. So it's really exciting times for us. So, and we're starting to see a realization from investors that uranium is a great sector to be in. So we've had a bit of a price movement upwards. So next slide, please, Jane. And just to summarise what we've got this fantastic position, nuclear fuel position in tenements in Namibia, the largest in the country. We're actively exploring on it, and we're getting successful exploration results. We've got the 61 million pound Maranika uranium project in the country. We've gone and picked up these assets in Australia, the 48 million pound, which we're already demonstrating we can add value to those through application of upgrade. And what upgrade brings to the company is enormous in terms of reduction in capital and operating costs, and gives us an advantage compared to our peers. We've got an experienced team, technical expertise on the champion of the upgrade process. We've got plenty of uranium experience, so we know what we're talking about. And what a great time to be involved in the uranium industry. It's a reliable baseload, carbon-free nuclear that everybody needs. The world's realising we need it. So I look forward to what the future brings for us. And thank you, Jane, for the opportunity of talking.
Wonderful.
Sorry, was I too quick for you, Jane?
No, that's fine. Thanks for the presentation, Murray. We've got a question for you. So with significant news flow over the next 6 months from EM studies in Namibia, can you please provide a more detailed timeline on these results?
So we're expecting those this month, the EM results, just being analysed now. And from that, we'll plan our drill programs through those Namibian tenements. So as I said in the presentation, we've got a driller booked for September. We're hoping we can engage him through the rest of the year through all those tenements and drilling on the paleochannels we've identified by EM.
Wonderful. Well, thank you for joining us again today, Murray.
No worries, my pleasure. Thanks, Jane.
Thank you. And of course, all presentations from today's webinar will be available on brokerbriefing.com. So next up, we are joined by Dr. Liz Dallimore, who is the CEO of Argenica Therapeutics. To tell us more about their novel neuroprotective therapeutics, I will introduce you to Liz. Good morning, Liz.
Thanks, Jane. Can you see my video? It should be...
We can't actually.
Okay.
It's a bit strange. You might just need to go to down to the bottom.
Let me try again. There we go.
Perfect.
Perfect.
Welcome.
How are you? Thank you. Thanks, Jane. Thanks for having me. Do you want me to share my screen?
That's okay. I can do it from my end.
Perfect. That's great. Just wait for that to come up. Thank you. So look, what I want to do, I know I've only got 10 minutes. So really what I want to do today is, given that Argenica is a newly listed company, is to just talk about the Argenica story, share that with everyone and sort of where we hope to head in the next 12 months. So next slide, please. So who are we? Argenica Therapeutics, we're looking to develop best-in-class novel neuroprotective therapeutics that can provide protection to brain cells that would otherwise be irreparably damaged following brain injuries such as stroke and other types of traumatic brain injuries. So what is great about this company and this project, so whilst it's newly listed, it has our lead candidate has been in development for over 6 years by leading researchers at the Paraneuroscience Research Institute here in Western Australia. And through that work, our lead candidate, ARG-007, has shown evidence of efficacy in multiple models of stroke and other types of brain injury. So through our IPO listing, we raised 7 mil, and that money will take us to the end of our phase 1 clinical trial and allow us to initiate our phase 2 clinical trial. So next slide, please. So this is just a snapshot of our capital structure at IPO. We're sort of sitting around the listed price of 20 cents with a similar market cap around that 15 mil. So still great value in the company and some really exciting milestones coming up. Next, please. So these are just some of our investment highlights. So what we're looking to do with our lead candidate, ARG-007, is solve a huge unmet clinical need. There are currently no products on the market that provide neuroprotection to brain cells following injuries such as stroke and other types of brain injuries. So what we're trying to do at Argenica is to be just one of a handful of companies that can address this unmet need. As I mentioned, we've got fantastic preclinical data from our Chief Scientific Officer over the past 6 years, showing the efficacy of our lead candidate in multiple models of stroke. We've got a really experienced board and management team with both experience in capital markets and commercialisation of drugs, and a clear pathway to get our lead candidate into the clinic. Next slide, please. So this is just the market that we're trying to address at the moment. So as I said, there's no marketed drugs for neuroprotection, and around 15 million people suffer a stroke globally every year. There are 2 main types of stroke that people suffer. So one is a hemorrhagic stroke, which is caused by a clot in the brain. And that's the most predominant type of stroke, with around 85% of patients suffering an ischemic stroke. The other type of stroke is a hemorrhagic stroke, which is a bleed on the brain. And the treatment types for these 2 types of strokes are quite different. The estimated cost to treat stroke projected to the year 2030 is around 183 billion. So huge cost to the healthcare system and burden on the healthcare system. Next slide, please. So why is neuroprotection so important in stroke and indeed other types of brain injuries? So stroke is one of the leading causes of death and disability worldwide. And as I mentioned, the cost on the healthcare system is huge. So when someone suffers a stroke or another type of brain injury, brain cells suffer significant damage, and often this damage is irreparable, so nothing can be done to fix it. The time that patients have to receive treatment is really critical. So for every hour delayed in receiving treatment, the brain ages around 3.6 years. And the current therapies, they're only really addressing the underlying cause of the stroke. So for ischemic strokes, which is caused by the clot in blood vessels in the brain, the treatment options is really to remove that clot. So that's either done by mechanical thrombectomy, which is surgically removing the clot, or by administering a drug which dissolves that clot. So as I said, no therapies that are actually protecting the brain cells immediately following stroke. Next slide, please. So our lead candidate, ARG-007, is a potent neuroprotectant drug. We believe it's safe and can be given as an early intervention, so by first responders, paramedics in the field. It'll minimise injury to brain cells, which will lead to improved functional outcomes for these patients. Next slide, please. So currently what happens when someone suffers a stroke is that the paramedics arrive and they diagnose that person as having a stroke. The in-field triage is relatively limited. So the role of the paramedics is to get that patient to a stroke care clinic in a hospital as soon as possible. Because there's different types of stroke, so the ischemic stroke or the hemorrhagic stroke, it's really important that doctors diagnose the type of stroke before they administer a treatment. If the clot dissolving drug that I mentioned previously is given to a patient that has sustained a hemorrhagic stroke, it can exacerbate the bleeding on the brain and even lead to death. That's why it's really important that patients are diagnosed as for the type of stroke that they have prior to treatment being received. Next slide, please. So what we're trying to do with our Lead Canada ARJ 007 is to buy patients time from the onset of stroke to where they can receive the treatment. So in that time, we really want to do is reduce neuronal cell death, which will lead to improved functional outcomes for these patients. Our drug can be administered by first responders, by paramedics in the field. So it's increasing the treatment window for these stroke patients. Next slide, please. So our preclinical data has shown that our drug has significant efficacy in animal models of stroke, reducing the infarct volume, which is really the volume of cell death seen in the brain. And that is sustained for a 28-day period post-stroke. We've compared it to our nearest competitor, which is NA1, which is in development by a private Canadian company, which is currently in phase 3 trials. And we've shown we achieve greater efficacy than this nearest competitor. Next slide, please. And the most important thing is that we've shown that our drug does not exacerbate bleeding in a hemorrhagic stroke model. So that's why we know it can be given by first responders in the field, by paramedics, which is exciting and fantastic for this drug. Next slide, please. So we are following a typical drug commercialization process. So we've conducted our preclinical animal studies. We're currently in the process of finalising our PK, and we had an announcement this morning on some pilot PK results, moving into our safety and toxicology, leading into our phase 1 clinical trial. And then post-phase 1 clinical trial, so the phase 1 is done on healthy subjects, we'll move into our phase 2 clinical trial in stroke patients. Next slide, please. So just in terms of our development pathway, so we have released some preliminary pharmacokinetic data this morning. We'll have our final PK data in Q3 this year. We're looking to scale up our GMP manufacturing for our safety and toxicology studies and our phase 1 clinical trial, with the phase 1 being initiated around the end of Q4 2021. Next slide, please. So as I mentioned, we've got a fantastic board and management team with extensive experience. I don't have enough time to go into all of them. And next slide, please. And a world-leading research and clinical team with extensive experience in running stroke clinical trials. So fantastic to have these guys on board. So thank you.
Sorry, technical issues. Okay. Well, thanks for the presentation. We've had a question come through, so I'll jump into it. So today's announcement mentioned that the company is seeking to optimize the manufacturing process. Can you please elaborate on what is involved in this?
Yeah, sure. So our drug is a peptide, and to optimize it, we need it to be what's known as good manufacturing practice grade drug material. So we've just in the process of optimizing that and scaling up that drug so that we can produce enough of that drug to do our toxicology studies and into our phase 1 clinical trial. So we should have an announcement coming out around our manufacturing in the next few weeks.
Perfect. There's actually just one more that's popped up as well. Yeah. So will your brain injury stroke treatment cover concussion brain damage?
Yes, so we have preclinical data looking at traumatic brain injury. So there's severe traumatic brain injury, which is often caused by, say, road accidents, which is quite severe. And then there's also concussion, which we deem as mild brain injury. So we're looking at both of these applications, absolutely. So they both require neuroprotection and something that we're looking to explore.
Wonderful. Well, that's all we have time for today, Liz. Thanks for joining us.
Thanks so much, Jane.
So next up, we have a presentation from Tom Revy, Managing Director of Black Earth Minerals with the ticker code BEM. I will now hand you over to Tom for more on their Mineary graphite project and their downstream graphite processing deals. Hello, Tom.
Hello, Jane, and thanks very much. Black Earth is an ASX listed company, code BEM, which listed just 3 years ago. In that short time, the company has achieved much thanks to the efforts of our team, evolving from explorer to developer. And today we have a clear path to cash flow across not one, but 2 integrated projects. Slide, please. We have the slides out of order. Could we go next slide then?
Sorry, Tom.
That's all right. I think these have been put in the wrong order.
Oh no, where would you like to start?
You probably got them back to front, so. Okay, no.
Executive summary.
They are out of order. All right, so let's start. Next slide, please. Okay. So our vision itself is clear. We want to basically become a material vertically integrated player in the global graphite supply chain. Also, given the time constraints, I'm only going to cover our 2 highest priorities at this stage, which is our Mineary project and our expandable graphite play. Our Mineary graphite project itself is located in southern Madagascar. It's now about 2/3 of the way through the DFS or BFS, which is scheduled to be completed early next year. Graphite concentrate has been thoroughly tested by both reputable international laboratories and also tier 1 end users. One of our key differentiators is the coarse flake nature of our product. A product with significant demand growth, a significant price premium over most mine product produced globally, and an outlook of a substantial shortfall in global supply in coming years. Our downstream process strategy is now bearing fruit. As announced in the market, we are now in the process of finalising a joint venture agreement with a long-established and reputable expandable graphite producer, Metachem, to co-construct a 2,000 to 3,000 tonne per annum expandable graphite facility in India. Our plan is to be in cash flow within 12 months from now. A strong endorsement of this plan is that we recently signed a full legally binding agreement with a tier 1 European buyer of the product, being Graphite Bergbau. Finally, for all the reasons I just discussed, the critical graphite market looks strong and the outlook looks even stronger. Slide, please. This slide gives a snapshot in terms of the company itself. The company has a strong commercial and technical team with significant graphite and African project experience. With only around 200 million shares, the company has a healthy cash balance and, despite a low enterprise value, has provided an attractive return for those who invested over the last 6 and 12-month period. Like many of our peers, June wasn't exactly a good month in the market, but hopefully investors will be pleased with the news flow coming in coming months, and I'll be touching on that a bit later. Slide, please. I've shown this graphite demand slide before, but it's an important slide. Buyers of natural graphite are acutely aware of the impending substantial demand in graphite across all flake sizes. There's an obvious chasm right now, however, between end users' knowledge and investors' perception of where graphite's going. For me, it's only a matter of time before the market picks up and things will start to move, particularly with the likely supply deficit that market commentators are calling for 2024 to 26. Of critical importance to our plans is the potential development of our expandable graphite plant and the Madagascar mine, both planned to come online prior to this shortfall, which we believe should be enormously beneficial for our shareholders. Slide, please. And again. Okay, so Madagascar for us has always been a real differentiator with our peers. While many of them have slowed development plans over the last 5, 6 or even 8 years, we've been moving expeditiously from our first drill hole to where we are today in just over 3 years. This couldn't have been achieved without the assistance of local stakeholders. A country with a very long graphite mining and export history, together with its reputation for quality product, makes Madagascar a no-brainer for us to develop and operate in. Next slide. This gives a view of our leases in Madagascar. Note that each of these green areas represents graphite mapped at surface, an area covering roughly 3.5 kilometres by 7 kilometres. Our Razafi resource sits on a granted 40-year mining lease, with our current exploration activities in the high-grade area to the northwest of Razafi as marked. Only 10% of our lease area has been explored, which has a defined exploration target of 260 to 380 million tonnes at that 6 to 8% total graphitic carbon mark. We are truly operating in an envious graphite district comparable to anything else worldwide. Slide, please. I've previously shown our study outcomes, which demonstrates both technically and financially robust project. An attractive NPV and IRR for a startup capital, which is infinitely financeable for a junior. What's new to the slide are our current enhancement programs, which the board believes has the potential to significantly enhance the project's value. All these activities will be completed as part of our DFS program. We will report to the market on the findings of each of these individual activities once completed. Slide, please. This slide provides a simple picture of our activities and how each carefully relates to our overall strategy of being involved in the global graphite supply chain. While our immediate focus remains on the development of our low-cost expandable plant and the completion of the Mineary DFS, we'll continue to review other downstream options more as a medium, long-term strategic venture rather than overloading our current available funds and capabilities at this stage. Next slide, please. Social and community activities and interactions are paramount to the board's ESG program. The list on this side reflects only some of the commitments Black Earth has made to date, a small portion of how we interact with all Madagascan stakeholders. Local villages to date have demonstrated enormous support for the development of our Mineary project. Next slide, please. Again. As the slide states, this is a low risk and capital entry into the downstream market, which provides shareholders a higher revenue stream and company cash flow expeditiously. Our intentions are to become the first ASX listed company to produce this highly sought after, highly priced product. As announced last week, we already have a legally binding offtake agreement for up to 2,500 tonnes per annum of expandable graphite. While we will initially purchase raw material on market for the facility, our intention is to feed our own product from Mineary into the plant in 2023 once our Mineary project is up and running, thereby realising a much higher margin for shareholders. Is our raw material good enough to compete internationally? Well, according to the independent German laboratory NGS, it's a very clear yes, as the quote from them in the bottom right hand indicates. Slide, please. In order to explain our tactics and to reflect the importance of this slide, I'll simply read most of it. Why expandable graphite? Well, strong demand outlook with an impending global shortage in raw material supplies in coarse flake material. Mineary material has proven to excel in this area. Why Metachem? They're one of the pioneers of expandable graphite. Metachem has been in production for over 25 years and has an exemplary reputation with tier 1 global buyers. And finally, why India? It's a well-educated and cost-competitive workforce available with specific skills, knowledge and experience in expandable graphite production. They have the availability of the necessary raw materials, as in reagents specifically, an attractive government fiscal regime with incentives, and an excellent government ties currently between Australia and India. Next slide, please. And finally, our overall news flow that we're looking at over the next few months. Firstly, a detailed download of our recent large-scale pilot program is a few weeks away, and will demonstrate a number of important aspects towards the development of the project. Results and activities from our exploration works in both Madagascar and Donnelly River will be coming out on a regular basis over the next couple of months. Ongoing reports relating to expandable graphite plans with Medichem will be on a regular basis. There'll be the conclusion of the joint venture agreements, the engineering and costing report, the commencement of construction, and thereafter production. The appointment of an independent engineer to complete the engineering and costing details of our Mineary DFS will probably happen in the next few weeks as well, to coincide with the release of the details from our pilot plant program. An expanded Mineary resource based on our current exploration efforts in the northwest area. And finally, a continued offtake arrangements, discussions, etc. will release to the market. So a very busy period coming up over the next 3-4 months with plenty of news flow. Next slide, please. And with that, I thank you for your time and happy to take any questions.
Well, thank you for that, Tom. I apologise for the technical issues there. I'm not sure what happened, but it's a great presentation and always great to have you back on Broker Briefing. So I'll jump into some questions. Does the company plan to focus on advancing the existing downstream graphite deals, or are there further opportunities currently being explored?
The answer is yes and yes. But look, we have enough on our plate. And as I said, I've just covered the two key priority areas. From a downstream processing point of view, we'll continue to work with other companies in terms of where we can add value for shareholders. So that'll be a constant sort of thing. In terms of that'll be more medium to long term though, because these things take time. They need samples to be tested by these parties, etc. So that's important from our perspective. And you know, it's an ongoing thing. But right now, short term, complete the JV with Medichem and focus on that DFS.
Wonderful. Well, that's all we've got time for today. Thank you for joining us, Tom.
Thanks again, Jane.
So next up, we have a presentation from Graham Kelly, Managing Director and CEO of Noxopharm, with the ticker code NOX. So to tell us more about their clinical stage drug development, I'll introduce you to Graham.
Thank you, Jane.
Graham,
So in the short time, you're right. Hello.
Yep, there you go.
Okay, all right, thank you. So in the short time we've got, I'm just going to focus on what we see as the value proposition of Noxopharm as an investment opportunity. If you want details of our science, then I'll direct you to our website. Next slide. So what is our value proposition? Well, when it comes to the decision to where you put your investment dollar, you're spoiled for choice, not just in Australia, but certainly globally in terms of biotechnology and drug development. So what is it that we believe distinguishes Noxopharm from other drug development opportunities? The first thing is that we have a technology platform. And that means that we've got the opportunity to develop multiple drugs. Now, later on, I'm going to share with you a very confronting statistic, which is the appallingly low success rate of drug development. And that means that single shots on goal is a very high risk strategy. So multiple drugs with multiple opportunities, in our view, is a very significant de-risking strategy. We're also not copying other companies. We're not in a race with a number of close competitors, all roughly doing the same thing. Our platform is unique, and we expect it to lead to revolutionary concepts in therapeutics. The drugs we're developing are in major areas or in areas of major commercial opportunity and certainly major M&A activity by the global pharmaceutical companies. So we're playing in the right space. We also own our drugs outright. There's no milestones or royalty checks to be paid. And finally, we've got a management team that I'm confident has the capability of doing the job. Next slide. So our technology platform has proven to date to be a rich source of drug prospects. Now to the point where we've been able to identify 4 different centres of drug development. And each centre is capable of its own business opportunities. And so we regard these as 4 separate future businesses. Now, this allows the company to enter into commercial arrangements with any one or more or even all of these business opportunities. Next slide, thanks. The first of these business opportunities is where the company started, and that's with our drug candidate, Vyondra. And Vyondra is a completely revolutionary concept in cancer in that it's looking to boost the effectiveness of other common forms of anti-cancer therapy. And as that might sound an obvious thing to be doing, but in fact, it's not been possible up till now. No one that we're aware of has been able to achieve this across multiple forms of cancer therapy. And the fact that we can is down to the way this particular drug works. Now, there are 4 therapies that we're looking to combine our drug with. And between these 4, we're covering over 90% of all cancer therapies. And once you develop metastatic disease, that is disease that's spread away from its site of origin, the best that any of these therapies can offer for the great majority of patients is short-term help. And the aim of Vyondra is to boost the effectiveness of these common therapies, ending up with a survival outcome well beyond what we currently see. Next slide. The second of these business opportunities, again, is in an exciting new area of cancer research. The current crop of anti-cancer drugs are designed to target the cancer cell. This new approach looks beyond the cancer cell to what's going on in the environment or the microenvironment of a tumour. So we're looking to see what's happening around the cancer cell, not inside the cancer cell. And this new direction has come from a fairly recent discovery that some types of cancer rely on growth signals from neighbouring healthy cells. So they co-opt these healthy cells to provide them with signals that promote their growth. And this certainly appears to be the case with very aggressive cancers such as brain and pancreatic cancer. Now, our technology platform has thrown up a new family of compounds that appear to be able to switch off these signals from the healthy cells. And that opens up the possibility of being able to convert an aggressive cancer like pancreatic cancer or brain cancer into a much slower growing cancer that is more easily treatable. Next slide, please. The third of these business opportunities is using Vyondra to block a condition known as a cytokine storm, which is an excessive form of inflammation that leads on to something called septic shock. And septic shock is responsible for some 10 million deaths each year. That is, it's roughly 20% of all death from disease in humans worldwide is due to septic shock. Now, 2 years ago, the closest that most of us came to knowing about cytokine storm and septic shock was the roughly 1 million or so people who died each year worldwide from the influenza virus. Now, what the current pandemic has done is look to have added about another 2 million deaths each year to that number, along with an untold number who suffer long-term side effects known as long COVID symptoms, many of which are still yet to be identified. And as the world has come to better understand the processes involved in septic shock, something called STING has emerged as a major player. I'm not going to bother you with the science of STING, it's all on our website, but STING is a primitive signalling process that's present in all our cells, whose job it is to detect the presence of a virus. And once that detection has occurred, it then kickstarts an immune response. And for reasons that still remain unclear, that resulting immune response in some people is just out of control. It's just excessively high. And instead of settling down after it's done its job, that is stimulated immune response and got an antibody response to the coronavirus or the influenza virus, instead of settling down, Sting just keeps accelerating and eventually results in the body essentially attacking its own tissues. And that is what's killing people in this pandemic. So what's this got to do with Vyondra? Well, it emerges that Vyondra is a potent blocker of Sting. And to the extent that we are able to check this, it appears to be the first Sting blocker that's reached the clinic. Now, we've just finished a trial of Vyondra in Europe in hospitalised COVID-19 patients. And we're looking to see whether Vyondra can stop patients' blood. These are people who've been admitted to hospital with low-grade or moderately severe lung infection of the coronavirus. We're trying to stop that damage, triggering this pouring into the blood of something called cytokines, which are proteins that just promote inflammation. And if they reach a certain point, the patient then tips over into septic shock, which means they go into an ICU unit. They're really unable to breathe and to receive oxygen under their own steam. And a high percentage of these people will die. Now, we finished that trial. We've generated over 50,000 pieces of data. It's all being currently reviewed, and we expect to be reporting on this in the next few weeks. Next slide. This is the fourth business opportunity or program, and it stems directly from that finding that Vyondra is a Sting blocker. Now, beyond the current pandemic, Sting signalling has emerged as a major focus in the pharmaceutical industry as a target for chronic inflammatory diseases. So the death from the coronavirus is associated with this hyper-inflammatory condition, which has a lot in common with chronic inflammatory diseases such as rheumatoid arthritis and autoimmune diseases such as multiple sclerosis, motor neurone disease, and so forth. So we see a substantial opportunity here to develop drugs that are based around what appears to be a very important discovery on our part of how our drug is working against Sting. So we've created a subsidiary company called PharmaRaj. We've entered into a partnership with the Melbourne Hudson Institute of Medical Research, which is, in our view, the leading investigator in the Sting process in the world. And it's a beautiful bit of coincidence that the institute that has that ability is in Australia, and the company that has the first potent blocker of Sting signalling in the clinic happens to be in Australia. So the idea is to develop an entirely new family of Sting inhibitors. And PharmaRaj is making very solid progress to the extent that I'm quite comfortable in believing that PharmaRaj is now at the leading edge of this whole new field of drug development. Next slide. So this is our management team. I won't dwell on it, but only to mention that the people here have significant experience in drug development generally, as well as a number of senior executives out of the big pharmaceutical companies. So we've got the right blend to continue with our drug development and to take it right through to a point of commercialisation. Next slide. Now, the main thing to note about our key metrics is that our cash position gives us a decent runway well into 2022. So we're currently well funded. Next slide. Now, this is the matter I referred to earlier about the appalling statistics, and this is something that companies rarely mention, and that is the extraordinarily high failure rate of drug development. Across the board, for every 250 drugs that enter clinical trials, only one ever makes it to market. Now, fortunately, in the cancer space, the odds are a little bit better than that. They're about 10 times better. It's about for every 25 drugs that come into humans, about one will make it all the way to the market. But however you cut those numbers, they're appallingly low success rates. So this is what we believe are the reasons that make Noxopharma a value proposition. We've got 4 business opportunities, and that gives us multiple shots on goal. And I see that as a major de-risking proposition. And the other thing that I'll just finish on is that we're looking with Vyonder to help make other drugs work better. Now, the other treatments that we're using are already approved. They're already out there, and they're doing the heavy lifting. We are simply adding our drug to them to make them work better. And that comes with a very considerably lower risk compared to relying on your drug to do the whole lot, to do the whole heavy lifting. Next slide. And so that just reminds me to thank you for listening, and very happy to answer any questions.
Well, thank you for the presentation, Graham. I'm looking forward to hearing some news about the COVID clinical trials, as I'm sure a lot of our webinar attendees are as well. We've actually had a question that's come through though. So how does Noxopharm compare against competitors in terms of how far advanced the drug development is?
Well, that's an ongoing horse race, we keep a close eye on competitive companies. We've got 4 different anti-cancer aims, and in some of those there are other companies that are working in the same area but with different technologies. In others, we announced, for example, today that the FDA in the US has just granted approval to run a trial of our drug in combination with external radiation. Now, we're not aware of any other company in that space. So that's something that we have on our own. So we've got a blend of, yes, we're in horse race, and others we are the only horse in the race.
Brilliant. Well, that's all we've got time for today. Thank you for joining us, Graham.
Thank you very much. Thank you.
So next we are joined by Julian Stevens, Managing Director of Sovereign Metals with the ticker code SVM. I will now hand you over to Julian to tell you more about the company's rutile project.
Thanks, Jane.
Let me pull up your presentation.
Morning, everyone. Well, Sovereign Metals is a rutile company. We have discovered what is one of the largest rutile deposits in the world in Malawi in Southeast Africa. Next slide. So we believe we've discovered a strategic and globally significant natural rutile resource. Next slide, please. So what is rutile? Well, rutile is a titanium mineral. Actually, it's the purest natural form of titanium, and it goes into mainly the pigment market to make paints, toothpaste, white plastic, etc. About 30% goes into the welding market as flux for welding rods, and about 10% into the titanium metal market for aerospace and medical. Next slide. So titanium is about a 15 billion global market. And as I said, natural rutile is the rarest and highest grade and highest value titanium mineral. It generally competes in the titanium market with its poorer cousin, ilmenite. Rutile is about 95% TiO2, so very pure, whereas ilmenite is about 50% TiO2. And this is seen in no better place than in the pricing of these minerals, where rutile is priced at around $1,200 a tonne and above, and ilmenite above $200 a tonne. Next slide, please. Natural rutile has a much lower carbon footprint when it's used in the major industrial process being pigment. It's favoured by pigment producers over higher energy and carbon intensive upgraded titanium feedstocks made from ilmenite. Natural rutile can be used directly in the pigment production process, and we can save about 2.8 kilograms of carbon dioxide emissions compared to some of the other processes using ilmenite. So a much greener, much more environmentally friendly mineral than its poor cousin ilmenite. And this is sort of borne out by a comment by Rio Tinto recently, where they say that upgrading of titanium feedstocks are high temperature and energy intensive processes, and they lift the group's average carbon intensity. So some of these bigger companies are targeting a reduction in CO2 emissions. Next slide, please. Well, titanium is defined as a critical raw material in a number of jurisdictions, and particularly the US and Europe, and it's growing in importance. Next slide, please. Natural rutile is in supply deficit. It's genuinely scarce. And why is that? Well, there's mature mines in the world with declining grades, a general lack of new rutile-rich deposits to fill this gap. And for that reason, over the last 10 years or 5 years really, and looking forward, demand has and will always exceed supply. Next slide, please. And this is borne out in the pricing. So we've seen significant price rises in the natural rutile price. This is a graph over the last couple of years of the spot price for rutile. Spot price is generally significantly higher than the contract price, but we've seen prices rise sort of 20 to 25% over the last 12 to 24 months. So $1,800 up to $1,800 in the spot market, and around $1,200 in the long-term contract market. At the moment, there's extreme supply side tightness, and this is being exacerbated by new production suspensions recently announced by a number of major high-grade titanium feedstock producers, including Sierra Rutile and RBM Richards Bay Minerals. So this drives a strong market fundamentals and will drive a robust long-term price. Next slide. So what have we found in Malawi? Over the last 18 months, we've made a major rutile discovery and announced recently a maiden JORC mineral resource of 644 million tonnes at 1% rutile. And that includes a high-grade component of around 137 million tonnes at 1.4% rutile. Next slide, please. This puts us as about the second largest rutile deposit in the world compared to Sierra Rutile. And we expect to be able to grow our resource significantly in the coming quarters. Next slide, please. So what's the growth potential? Okay, the area in red here is the area that we've taken to the inferred JORC resource category so far. That's just 43% of the known mineralisation or the known mineralised footprint. So we've got an additional 57% of known mineralisation there in the green that's yet to be brought into the resource. So you can see that we will be able to expand our resource significantly with additional step-out drilling. Next slide, please. Okay, so what are we targeting here? We're targeting a simple and low-risk operation, mining high-grade material from surface. In fact, all of the highest grades here in this deposit are right at surface. It's hosted in soft friable material that should be suitable for hydro mining with high pressure water guns or dozer trap mining methods. The processing is simple, using a conventional mineral sands flow sheet and producing just one high value mineral at the end in the mineral separation plant. So it will be a simple mineral separation plant at the back end. And like all mineral sands mines, we will be undertaking progressive rehabilitation. And that, along with the low carbon footprint of this material, positions us for effective ESG outcomes for the project. Next slide, please. So as I said, it's a conventional and proven flow sheet. So we have done a number of metallurgical programs here. In our last metallurgy program, we used a bulk sample of 1 tonne. We were able to achieve a very high recovery of near 100%, 98% in this case. And this produced, and we were able to produce a premium rutile product grading 96 and up to 97% TiO2. Next slide, please. And this puts us in the premium product specification category. On the right-hand side here, you can see some of our peers, but critically, we're well above the 95% TiO2 level to be classified as premium rutile. There's no critical impurities in this product. It has standout chemical parameters. Another feature of rutile is you need a coarse grain size for it to be able to be effectively used in the pigment making process. And so we have a highly favourable grain size here of 145 microns compared to other leading market producers of around 124 microns, 125 microns. So this means our material is suitable for all major natural rutile end-use markets, dominated by pigment and welding sectors. And we have sent some samples out to potential off-takers and have given us highly favourable feedback on the specifications of our product. Next slide, please. So we're in Malawi in Southeast Africa. Malawi is a stable, transparent jurisdiction, increasingly attracting international investment, and the government has significant potential and appetite for mining. We have excellent operating infrastructure in place here as well. Next slide, please. So there's an established rail network that almost goes through our deposit, paved roads, grid power becoming available, and established labour pool and other industrial services, because we're only about 40 kilometres away from the capital city, and plentiful fresh water sources for operations. Next slide, please. So what are we doing ongoing? Well, we've announced our a huge initial resource, and we're rapidly continuing our work programs with two key pieces of work being undertaken at the moment. An aggressive drilling program, a core drilling program has commenced to enable us to upgrade our currently inferred resource to indicated, to be able to use in a around the economics of this project. Next slide, please. So just finishing off here, we have discovered what we believe is a new and globally significant rutile deposit within what we believe is a globally significant rutile province. It's a potential new source of environmentally friendly rutile to go into the titanium industry. Rutile has a much lower carbon footprint than its sister mineral, ilmenite. The market is in significant deficit, and that deficit is expected to grow. So there's a huge gap there for us to be able to fill in the market. We're in a stable, transparent jurisdiction with excellent infrastructure, and we've got a proven management team with significant African experience. Next slide, please. Thanks very much, everyone, and happy to take some questions.
Well, thank you for the presentation, Julian.
Thanks, Jane.
I'll run into some questions now. So
Sure.
do you expect supply from major producers to continue to be on hold, further driving the rutile price higher?
Well, we've had a couple of announcements in very recent times from, I guess, a couple of producers of high-grade titanium feedstocks. So Sierra Rutile have announced that they're considering suspending their operation in Sierra Leone. And Richards Bay Minerals, or RBM, owned by Rio Tinto in South Africa, has announced force majeure conditions there and has shut down production, announced a couple of days ago. So those operations are having some difficulties. I can't predict the future and what will happen with those, but I do expect significant supply, continued significant supply side shortages.
And there's just one saying, can you please provide an update on the company's graphite project?
Sure. So we actually, a little bit of background, we actually started in Malawi looking at graphite, and we have taken our Malangundi graphite project to a PFS. Now we have recommenced work on that, on the graphite project, and some of the work that's underway at the moment is the completion of the environmental and social impact study, and that will culminate in us being able to apply for a mining license there and look for options to create some value for shareholders out of those projects.
There's another question that just popped up now saying, can you comment on any risks of being landlocked and transporting materials through neighbouring Mozambique?
I can. Look, we've got, obviously, we've got that Nacala rail corridor there. We've got a second corridor as well that is currently in construction, which will go to the port of Beira. So we have the option. This is a high value product, so we would have other options of other rail routes out of Malawi and we could also truck the truck the product if you really, really need to. I don't expect that to happen for us to need those other options.
Oh, well, thank you, Julian, for coming on to Broker Briefing. It's great to have you on here.
Great, Jane. Thanks very much.
And of course, all webinar recordings from today will be available on brokerbriefing.com. And thank you all for joining us today.